Here we go. Here it comes. The jobs report, boy. It's always these reports that kind of get me excited. And I don't know why. It's like we've been looking at these reports for years. Many years now. We just cover them all. Jobs, inflation, the Fed. And they're like in finance. I feel like there's not that much that's exciting. But then there's so much to get excited for. It's like these jobs reports or earnings. And you get to see how your theses play out or your inflation thesis or whatever it might be. And it's so exciting. So today, obviously, we've got the jobs report in about 6 minutes coming up. Somebody on my video yesterday had had some theory that what wasn't a horrible theory, but missing, in my opinion, a lot of context. So I thought, you know what, the jobs report would probably be a good place to clear that up and give clarify my opinion on, because after all, the person's talking about the jobs report. So I'll show you that, and then of course here in 4.5 minutes or so, we've got some work to do with actually going through those job numbers. So we've got here's an individual. It's looks like it's I Like Sports 8636. And so in this this video where we kind of touch on inflation and jobs and the future of the Fed or whatever, they argue here a 12-month moving average for unemployment is trending up. Okay, so first, when I hear 12-month moving average, the first thing that I like to think is I'll go to there we go, St. Louis Fed unemployment rate. The first thing that I like to do is understand, well, over what time frame are they talking about? Or because realistically, if we look at the unemployment rate, we're probably at one of the lowest employment rates we've seen in the last 40 to 70 years. I mean, over here in the late 60s, you saw an unemployment rate around the 3-4. You saw an even lower one over here in the 50s. So it kind of depends to some extent what we're referring to when we're talking about, the moving average is trending up. I mean, we could see here, yeah, okay, we've gone from this low here in April of about 3.4 to about 3.9. So that's up about 0.5%. That's true. And it's fair to recognize. Okay. So then the trend usually accelerates into a recession. Well, we can kind of nuance that about unemployment, that the trend either accelerates into a recession or it actually, once the recession hits, the recession has started, it rapidly takes off, right? Often it's lagging, right? We get unemployment skyrocketing after a recession has started occurring. But somebody here says, to say unemployment will rise slowly without accelerating would be a historical anomaly. And so this is where I replied that, well, first we have to consider what we're talking about with the 12-month moving average moving up, because 3.4% is a pretty historic low. And we've actually done this before, where in the 1950s, we've actually moved up roughly 0.5% twice, once in 1951 and once in 1952. And we weren't in recession, or we didn't hit an immediate recession. So we don't necessarily go into recession when the unemployment rate goes up 0.5%. Like, some fluctuation here is normal. Look at how weird this one is. Over here in 1959, you actually had the unemployment rate go up almost 1 entire percent. And you weren't actually in a recession yet for nearly another year. Now, that's not to say that, maybe we won't be in a recession in a year, right? But think about it. We're always almost in a recession again. Like, there's always almost going to be the next recession. That's the way it is. The question is, are we concerned about a recession now? Another example was, look at this over here. How weird is this? At the end of the dot-com bubble. So the end of the dot-com bubble right here, look at that. You actually get this increase of the unemployment rate from 5.7 to 6.3, which is 0.6%. And you don't get a recession for 5 more years. So to argue that, somehow just because the unemployment rate trended up, that was solely because of that one reason we're going into a recession. No, it doesn't work that way. We can't look at just one data point. You need much more data than just one data point to suggest that realistically you have some kind of recessionary impulse that is so bad that we should be worried about it to the point of we've got to sell everything and panic. Panic is like when we're facing a wage price spiral and a Fed wanting to go from 0 to 5%. That is often a very reasonable panic time. Anyway, so with that said, let's now get the jobs data. All right, you ready for it? Because it's going to be out in just a moment here. We are looking for 185,000. Remember, if we get something with a 2's handle, we're going to see a skyrocketing of those yields. And if we get something with a 0 handle, like basically 50,000 jobs or something like that, it's plummeting. And we're getting, let's see, 185, 199. Oh, that's so close to 2. It comes in strong. Oh, that's going to pop yields a little bit here, I think. It's not like mega strong, but it definitely comes in 14,000 strong. Wow. Unemployment rate drops to 3.7. Well, there goes your moving average for that guy we were just talking about. Oh, my gosh. Wow. 199 change in private payrolls comes in at 150 versus 159. You've got, let's see here, unemployment rate again coming in at 3.7. We've got the average weekly hours of all employees actually ticks up. None of this is recessionary, man. None of this is recessionary. So labor force participation rate up 0.1%. So all of them literally up. So you have slightly stronger jobs, not like mind-blowingly stronger. Let's go ahead and grab yields. I want to see if yields are moving, although these sometimes take a moment. Oh yeah, look at that. 13 basis points on yields. Holy smokes, look at that. 13 bips on yields all of a sudden on that. So strong jobs report here, 199. You get an unemployment rate that drops to 3.7 from 3.9. Average hourly work week up 0.1 and labor force participation up 0.1. It's just not a recessionary jobs report. Let's actually get the BLS labor report, and we'll go through the details of it. Especially, we're looking for average hourly earnings, which I'm waiting for that to actually tick through here. So that'll be up in just a moment. And then we'll take a look at some of the reactions from suits and that. But it's actually, you kind of remember what I said. You want it to be as close to a match as possible. Average hourly earnings come in at 0.4 versus 0.3. That's a smidgen higher than we wanted. We really wanted to get closer to actually 0.2. So we got 0.4 on that. So a reason to see those bond yields potentially tick up a little bit. So here's the actual report. Again, there's that 199, little hotter. That's not recessionary. You've got unemployment rate edging down to 3.7. Yes, it's edging. That's right. Employment also gained in manufacturing, reflecting a return of workers from strikes. Okay, well, that's good. That could give us sort of this potential one-time adjustment in strike returns from the UAW potentially. Let's see here. Among the worker groups, the unemployment rate for teenagers, 11.4%, jobless rate for adult men, 3.7, women, 3.1, whites, 3.3, blacks, 5.8, Asians, 3.5, Hispanics, 4.6. These numbers are falling nicely, especially over here. Black unemployment is falling nicely in Hispanic. And this is what the Fed wants. They want to see an expansion of the economy to where more people are able to get more jobs more broadly. This is a good thing, actually. In November, long-term unemployment edged down. That's great. That's fantastic. We like to see that as well. This long-term unemployed number right here. So let's draw a little box around that. There we go. Employment to population ratio increased by 0.3%. Labor force participation, little changed, up 0.1, essentially flat since August. So good to some extent, though, because you're not getting a sort of falling labor force participation rate, which is good. The number of persons employed part-time for economic reasons decreased to 4 million in November. Let's see. Those who would have preferred full-time employment were working part-time because their hours had been reduced. These individuals. Oh, here. These individuals who would have preferred full-time employment were working part-time because their hours had been cut or they were unable to find full-time work. Instead, that number decreased by 300,000 right here. All right. In November, the number of persons not in the labor force who currently want a job was 5.3 million, little different from the prior month. So multiple different measures. I mean, the only thing here that really went in a negative direction was so far average hourly earnings up 0.1% at 0.4. That's so far the only thing that really went in the negative direction here. Otherwise, this is reasonable. Employment growth is below the average monthly gain, 240. Yep, 240 over the prior 12. The longer term average is about 187 or so, which, we're sitting here at 199 right now. Okay, here's where the jobs came from. This is always a fun one for debating. Healthcare added 77,000 jobs. 12-month average is 54,000. Ambulatory healthcare services, 36,000. Hospitals, 24K. Nursing, residential, 17K. This had a massive pop last month, and so it's stabilized a bit here. Government employment, 49,000 in November. Remember that when private businesses start really filling up and they have less availability for hiring more people, that's when the government can actually finally have an opportunity to hire people, because usually the government gets people second. Employment in manufacturing rose by 28,000 in November, reflecting an increase of 30,000 in motor vehicles and parts from a return from strike. Wow, so we got a 30,000 beat here due to the strikes. Wow. Well, I mean, so if you adjust just the strike portion alone, you actually had about a 168,000 job report here, right? Of course, the estimates would have incorporated the fact that you had a strike. So that's not necessarily a big deal. I'm seeing gains everywhere here. Employment and leisure hospitality up 40,000, almost entirely in food and drinking places. Leisure hospitality also added an average of 51,000 over the past 12. Okay, it's relatively in line here. Retail trade. Oh, that's interesting. Retail trade declined by 38,000. Employment decreased in department stores, furniture, home sailors, negative 6,000, negative 19 in department stores. That's because that's where you're starting to see the deflation, right? So we go ahead and put here, deflation is here in this category. That's where you're starting to see that joblessness start coming in, the laying off of workers in potentially the retail stores. Transportation, warehousing, negative 5K. Employment showed little change over the month. Average hourly earnings rose by 0.4%. It's a little hot, a little warm on that side. Let's go. I want to grab the household versus the establishment report. So let's get that. Okay, household data. Here it is. See if we can just see it together quickly. Okay, labor force. Wow, 532,000 increase of the labor force. And then the oh wow, look at that employed ratio, employed segment here. The household survey showed 747,000 new jobs. That's pretty wild. 700, and the unemployed level down 215,000. So 215 and 747. Let's write that down. That's a great number to pay attention to. So put that right here. Unemployed down negative 215K household, and then 747 increase in household. Now, remember what's interesting about the household data is this is the one where if you have multiple jobs, you tend to bump the number in the payrolls report, not the households report. Household report coming in this high is suggesting more individuals who want a job actually working. None of that's recessionary. The only thing bad out of this so far that I'm seeing, the only bad IMO is a 0.4% on wage gains, over 0.3% expected. We want 3% annual. Because remember, we want people to make more money. We just don't at any point want it to signal to the Federal Reserve, oh, we have to do substantially more. It's time to hike. I don't think that this report is so aggressive that it would do that or suggest that. Let's listen in here and I'll get some more feedback from the suits.
You put 747.
Yeah, Jimmy, 30,000 job effect because of worker strike. You added about 30,000 there because of the strikes.
As one that's been a little weaker than the payroll survey. Well, not this time around. It's a reason you don't really rely on the household survey. And so that's why you got this tick down in the unemployment rate. It's an influx into the workforce. And I was also looking at the duration of unemployment. That ticked down by from 21 to 19 weeks, Joe. So that's a big number there.
That's good.
Look, I just, you gave us all the numbers. You haven't really weighed in on what you think it all means. What do you think it all means?
It's good.
Well, first of all, to me, what it all means is where the market's going to go and how people can profit from this information. So I'll throw out there a very important technical. We had a cycle completed, a Fibonacci 34 trading day cycle completed in 10-year note yields basically at midnight. That cycle means that whatever trends you see this morning, you want to follow. So I would say yesterday's low yields right around that 409 to 411 area, that's it for a while. I think they go back up. That's what all the diehard core people out there want to hear. But the thing I really focused on is just how much I trust these numbers or not. So we see up 0.4 on month-over-month earnings, okay? That is the biggest going back to what, July of 22, when it was up 0.5%. But if you look at year over year at 4%, that is the weakest since July of 21. Okay, that is something I find a bit disturbing, especially when the earnings is such an important aspect of why traders.
Sure, because that annualizes to 4.8.
Soft landing or where we are on the inflation GPS.
Yeah, that's the harsh one. He's not wrong about that. I like this idea of following the trend on treasuries. I'll tell you, the trend on treasuries, though, let's be real, it ain't going to mean jack S until the CPI report, which is Tuesday. Like, you don't even have to wait that long to get the CPI report. It's literally Tuesday. 9, 10, 11, 12. Yeah, Tuesday. On Tuesday, you get the CPI report. Who cares what direction Treasury bonds go today and Monday? Tuesday is going to set the real stage for that trend.
Geopolitical threats. We know we're going to have to be funding the government again. We know we have longer term threats. So there are threats to this truly becoming a softest landing, but so far the labor market seems to be quite resilient.
All right. I see over here. Major feature of relevance today, it was the unemployment rate, which came in below every single economist estimate at 3.7%. Oh, that's interesting. That it came in the context of higher than expected participation, made it look extra strong. That wage growth exceeded expectations at 0.4%. Oh, see, that's actually a good point too. See, and that's what I wrote down. The bad is that 0.4 right there. But that's interesting because that 0.4 also came while participation up at 62.8, and we have the UI rate falling below every single estimate to 3.7%. I think when you look at that holistically, you're not here saying that the Fed needs to rapidly cut, but do I think this calls for more increases? No, absolutely not. And remember, the next Fed meeting is a day after the next CPI report, so I think CPI drives the boat here, because if you get a hot CPI, oh, we're going right back to 5% yield. You get a soft CPI, well, then that's characteristic of a soft landing. Am I wrong? I mean, think about that. Let's write that down for a moment. I think that's a very important thing to consider. What I just said, strong labor plus weak CPI equals soft landing, right? Soft labor plus weak CPI equals potentially recession. And then strong labor plus strong CPI equals more pain, right? Because the Fed has to hike more. So right now, this report is actually consistent with what you would want if you were a longer term bull. Again, with the exception slightly of that wage gain here. That I thought was very interesting. But you're not going to get those wage gains actually appear in retail stores because you've got deflation occurring over there. I wonder how much of those wage gains have to do with the strike, right? I mean, you get 30,000 striking workers coming back. Do they come back at a higher wage day one? Do striking workers come back day one with a higher pay? That I don't know if they do. Like when do those contracts go into effect? When does Ford UAW contract take effect? Pay. Let's find out. Let's see. UAW deal to cost $8.8 billion over life of contract. I don't know. Look at this. The suits 13 minutes later. This morning's payrolls numbers may have been harder to accurately estimate as the return of striking auto workers lifted the count by 30,000. Hey, that's what we had already talked about. Uncertainty about that may have skewed positioning ahead of the data. Exactly. S&P futures look to be roughly back to where they were before that hit. You know what? I want to, let me see if I can like message them really quick because I think that's actually very interesting. So yeah. Does anybody know that? Like, do you go back with higher pay right away? There we go. I love dad with an iPad. I could just see it. The dad with the iPad. They're cooking the books. Everything's rigged. It's all rigged. You know, like, I don't get me wrong. I think everybody is right to be jaded. And I am very jaded. If you watch me in the Meet Kevin podcast, I definitely agree. There are a lot of reasons to be jaded. But you know, I've just kind of assumed that every single report is equally jaded. So then I just kind of look at, okay, well, what's the difference then? Like, they're all rigged. So am I going to say that every single time? No, they're all a little wrong, maybe a lot wrong. So what are the differences? You know, that's the way I like looking at it, because otherwise it's like, well, why are you watching it then? You know? So anyway, all right, let's get some more here. Yields to rise as jobs report gives Fed reason to delay cuts. Yeah, that is true. I mean, there's no, this does not indicate that the Fed needs to roll over tomorrow and start cutting. You know, like I said, if we got a 50,000 jobs report here, I would be telling you right now, even as, you know, Kevin is bullishly positioned, I would be telling you this isn't good. Like, we're going to be in a recession before they actually start cutting. But that's not the case yet. And again, we know that unemployment is lagging. So it's really difficult to say, is this all just going to hit us at once? Right? Because really, where you start seeing the recessionary impetus is in this deflation line right here. In retail trade, that deflationary line, that is what it looks like when you start going into recession. Every business starts cutting. Good news is right now it's only that sector. I would be concerned, and I'll give you my formula, okay? It's not that hard. I would be concerned. Kevin is concerned when major industries, hold on, let's make that a little smaller so I have room here. Okay, so Kevin is concerned when major industries, which would be trade, construction, mining, goes negative. And I mean substantially, right? Okay, so that's one. Two, when trade is negative, trade is negative, or retail stores, right? We already have that. We have that. And food and drinking, okay, those would be concerned. You actually do have transportation and warehousing negative, partially offset by a gain in air transportation, barely. Right? So look at that. Negative transport and housing. Sorry, and warehousing. So when you start getting the broadening of this negative, and then you get consistency, and you get consistency in that data where only healthcare and government prop up the numbers, that's more concerning. But right now, we still have, and manufacturing, of course. How could I basically, forget hours worked, right? And hours worked go negative. So what do we actually have here? Well, hours worked went up 0.1 hour. We barely had a negative transportation and warehousing at 5K. We have flat major industries like mining and construction. IT's up 10,000. Retail trade down 39,000. That's one to watch. Leisure hospitality up 40K. Manufacturing's up 28K. That's one to actually write in here as well. 5 manufacturing. So out of those, 3 categories or 5 categories I wrote down, 2 of them are negative. One's barely negative. So again, we know unemployment is lagging, but even the data that we're getting here, it's not suggesting that a big recession is all of a sudden like here and we're in the midst of it and it's imminent. We don't really know that we're in a recession until we're in it, which is really annoying. So I don't see this as that bad of a report. I actually think that's one of the reasons you're getting treasury yields already start pairing. Look right here. So these shot up about 13 basis points. You've already given back about 5 of those basis points. Already given that back. So this again, I'm not. Yeah, somebody here says my yield curve hurts. Yeah, it's like it's like the rapid up and down. It's like, which direction are we going in? This is confusing. So regarding the inverted yield curve, we are still inverted by 45 basis points. We're for almost being back to uninverted. I don't think we're doing so terribly right now. Of course, usually it's the steepening phase that's the painful phase. But anyway, so we'll keep an eye on obviously what's going on with the yields here, back to 9.5 now. So we'll watch that. Here's Tesla in the pre-market down about 0.7, Enphase down about, is up about 0.1. Look at that NASDAQ recovery here. NASDAQ basically where it was before the report. So no change really over here. Palantir's up 0.5%. You've got Roblox up 5% here in the pre-market, back to $41. Why is it has all these big moves and it's still $40? Always $40, Roblox. Let's see here. S&P 500 back to positive. Yeah, good point. All right, what's going on with Roblox? Actually, I don't have any real news here other than a deadline for some class action lawsuit. Oh, whatever, man. It's always lawsuits. Oil's up 2.3% after this jobs report on WTI, but it's $75. So I want to look at a chart of like national gas prices because they should be down. National gas prices, which is good. I like it when gas is less expensive. Yeah, national gas prices right now are at $3 and about 19 cents. California, of course, about $1.50 more than that. I'd like to see a chart though of over time. So I'm just on like Google here. All grades. Here we go. All grades, retail gas prices. Okay. Can I zoom in on this? So we are Okay. We're at like September of 2021 levels. Yeah, 3.4. We're at September of 21 levels. So we are way out of the Russia spike, and we are out of this summer spike. But we're certainly not as low as we were in the mid 2000s, where we still have another about 80 cents to go to get back to those levels. That's really interesting. How about oil plummeting? Yeah, it's been going down nicely. Tell them what you want. Tell them what that indicates. Yeah, so I mean, there are a few things here that you have to consider when it comes to oil prices. It's easy to say, I think what you're implying here or insinuating is that, oh, well, oil prices down, that means a global recession. Well, I want to be very clear. I think it's very likely that many other countries go into recession. The United Kingdom, actually, quite frankly, the European Union as a whole, parts of South America. I think China's realistically in a recession. They certainly are, if you compare to their growth targets. There is going to be global pain on GDP. I do expect the United States will be a substantial outlier here. That the U.S., if there's one country that dodges a recession, it might be the U.S. in this one. Yeah, which is very interesting. But Germany's probably in a recession. This is deflationary for the United States. You have Germany's a massive manufacturing economy. And so is China. So your manufacturers are suffering. Now, what I did think was very interesting is, it's also worth noting that one of the reasons oil prices really quickly are going down is the sort of relaxation of geopolitical conflict. So it's not only the potential recession fear, global recession fear, but it's also a decline in geopolitical tensions. So that even with recent cuts to oil production by OPEC Plus, you're actually not seeing a large rise here in oil prices, which is great. Now, I saw an article. I can't remember where it was. It was the Financial Times, New York Times, or Wall Street Journal. I know it was one of those because I remember that's what I looked at like right before I was going to bed yesterday. I'm like, let me do my triple check. They're three great publications. I know there are people that, well, I don't like that one. I don't like that one. You have to go through everything with a little bit of a jaded hat on. Don't get me wrong. Like take everything with a grain of salt. Even what I say, don't listen to everything I say. It's okay, and I'm okay with that. I want you to be critical. By the way, we are working on a really cool update for the Meet Kevin app, where throughout the day when I'm traveling or whatever, I basically can give you little economic news and updates, and we want to get you the feeds that I have as well. So you not only get Kevin, but you also get the data feeds that we have. And I think that'll be really cool in the Meet Kevin app. Right now, you could use it for getting notifications on all the different channels. So you kind of know, like, okay, is Kevin on the live channel? Is it on the main channel? Where is it? But anyway, this article I was going to talk about was this here, Chinese activities. Okay, fine. I can't find the darn thing. But basically, it was like China's electric vehicle manufacturing is actually popping off right now. China EV manufacturing, and then they're struggling to find workers. Struggling to find work. Where is it? I found it. It was a New York Times piece. I knew it was one of those. It was literally published like minutes before I went to bed, midnight Eastern time. So this is talking about a Chinese worker who was working, making $1,100 a year in a dormitory, and now he's 42, making close to $60,000 a year, working as a senior electrician installing industrial robots, an electric car factory for NIO. It's kind of cool. China, these aren't like Optimus robots, they're like the arms. If you want to recruit people with relative electrical engineering experience, there are relatively few people in this industry. More than 1.5 million now work at dozens of electric vehicle companies in China and their suppliers. The largest of them, BYD. which has 570,000 workers compared to 610 worldwide for the Detroit Big Three. As part of the Chinese economy slowdown, Beijing needs to shift workers to sectors that are growing fast, like electric vehicles. They're basically talking about how they need to train more people in China if they want the Chinese to make more money, to actually go make money working at electric vehicle plants. YW here says China has a huge youth unemployment, but no one wants them to work in factories since most of them are highly educated. That's interesting. So just stumbled upon here says New York Times is well known for telling the truth. I mean, that's like, I get it. There's like, can you say that about absolutely everything that they post? You know, like I don't think so. I don't think you can do that. And I try to think, like, what political bias is there in saying that, hey, you know, Volkswagen is hiring for a new research center in NEO, will staff 3,000 engineers, and the Chinese government hasn't been training enough electrical engineers, as you know, maybe younger people don't necessarily want to work in the factories. The number of young people turning 18 each year in China has dropped by more than 40% since the mid-1980s. Based on the number of babies born in the past few years, the number of 18-year-olds will have in the coming years. So your new flow of labor here is horrible. Yeah, very interesting. My wife is letting go 4 of 16 employees the first of the year due to lack of demand. She's a dentist. I mean, who needs teeth? No, that's actually really interesting. Lack of demand for teeth. Was that like, how does that compare to pre-COVID, right? Because post-COVID, all the people who didn't get their cavities fixed, you know, blew up dental offices. So you kind of had this surge of dental visits, and then you have this reversion to normal. So did she have, you know, less employees before the pandemic or more? Or are you going back to normal? That is very interesting, though. Let's see here. Not enough 9-year-olds for the cobalt mines. You know, somebody's got to do the work. I'm just kidding. Obviously, child labor is an international violation and terrible. Let's see. Come to Sweden, we pay $7.30 USD per gallon of gas. Yeah. You and your Litrees or whatever you use over there. New York Times lost me with their COVID narrative. Yeah, they pissed a lot of people off. U.S. not in recession only because of exponential debt. Yeah, I think you're right. I absolutely think you're right. I think the massive amount of borrowing the U.S. government has done has absolutely helped the United States stay out of recession. But like I think you have to go to the next order of your implication there, because if your implication is, well, you know, it's rigged because the government's borrowing. No, it's not rigged because the government's borrowing. It's actually correct because the government is borrowing. The different discussion is that debt a problem? Well, yeah, eventually it's going to be a problem. Is that debt a problem now? Not really. That's the thing, right? Like it's so easy to be that guy at the bar that's like, I don't know, man. Everything's going to hell around here. I can't stand this Biden administration. All that money printing, all that debt we got. It's like, oh, okay. What do you invest in? Cash. I don't trust anything. Okay. It's like, that's fine. Like, you really think you're going to a recession, you're investing cash. I mean, you're just losing money in cash, like at least be in like treasuries or money markets, right? And that's fine. You could be in that too. But like, just because we're borrowing more, and just because borrowing is ridiculous and stupid and ludicrous, and I agree, the government is spending way too much money, does not mean we're going into a recession. Like, this is why I say, like, give me real data where we can be like, oh yeah, okay, yeah. That's concerning, and that's a sign of going into recession. But just borrowing more doesn't actually mean we're going into recession. It actually means, if anything, we're less likely to go into recession, because it's basically government stimulus money. Here you go, chip sector. Go build more factories. Here you go, electric vehicles. Have some more free money. Again, I'm not saying it's what I would do if I were running the government, but it's what's happening. So whatever. All right. Happy Friday. It is Friday. I thought it was Thursday for some reason. All right. Is the money printer ink or laser, so I can make correct investments? It's actually a spreadsheet, although the Federal Reserve does also have some physical money that they create, although mostly the Treasury Department does the actual printing. Isn't it crazy that holding cash in this country is a poor financial decision? Oh, well, no. I mean, like, I understand what you're arguing. You're making an argument that says like, hey, we should be incentivized to save. There's a duality there, right? Because you could just say, don't hold cash, but hold money markets or buy treasuries or buy, stocks and real estate, right? And have a diversified portfolio. So you could actually save in those things. I just think the vehicle of cash for saving is bad. I would rather save in real estate and save in stocks or treasuries than I would in cash. It's not to say don't save. Now, if we were saying don't save or don't invest at all, that would be crazy. That would be very bad, right? Fed will stay tighter for longer, Kevin. I think that's great. Who cares? And I don't know that there's much matter about rocking the boat in an election year. So they stay higher a few months longer. Does it really make a difference? Not really. It's all going to come down to the CPI reports. The jobs report is important to know that you're not really trending into recession. I gave you my formula for my concerns. It's right here in case you missed it, right? I want to see negative manufacturing data, transport data. And I want to see all these things starting to trend down, less hours worked, layoffs. That's when you're starting to trend to recession. And then that's when it actually starts blowing up. And that's when you get that self-sustainability. So yeah, pretty wild. So let's see here. Okay, good. So let's take a peek at how stocks are moving. Remember, folks, we're live every single day. The market is open now on this channel. I often dual stream with Twitch and Twitter, but I'm definitely always on YouTube. At 5:25 a.m. when the market is open, we go live for about an hour, 20 minutes. So happy to have you here. If you want to join, it's every day. The market is open. So see, tomorrow the market's closed. I won't be live. Okay, let's take a look here. Looks like the Q's falling again a little bit. Yeah, trying to round the corner there to the downside again a little bit as we buckle up for CPI next week on Tuesday. We've got the 10-year sitting up actually 11.4 basis points. I'm actually okay with that. I've started seeing a little bit of like ridiculousness in real estate again. Just the last like 3 weeks as the treasury yields have been plummeting. I swear I'm looking around going, what? An investor's paying that? Like there's some, I'm seeing some YOLOing in certain markets again. And I'm like, no. You're overpaying. You are speculating. And that's often when you get these people coming in with like hard money and they think they're going to be able to flip these properties in the spring. I don't know, man. About going in and flipping right now. Oh, wait a sec. They just updated the CPI estimates. CPI month over month expected to be flat now. 0%. CPI core expected to be 0.3. CPI year over year 3.1. CPI core year over year 4.0. That's interesting. I don't remember CPI month over month being flat on the estimate. So that's pretty cool. Okay, let's see here. Let's type in. I want to see if the Atlanta Fed is updated. They probably not yet, but I want to see if they're going to update after this jobs report. No, they haven't. The next one's the next week on the 14th after CPI and after the Fed. But this is the latest Atlanta Fed report at 1.2%. And then let's see what the other suits are saying. Expectations for rate cuts in 2024 look extra vulnerable to a pullback when you consider that traders have only stripped out 1 out of the 5 quarter point rate cuts they had priced in. Plenty of room for more rate cut expectations to be paired in. Yeah, so that's true. So basically what they're saying is after the jobs report, we went from estimating 5 25 BP hikes to 4. But obviously we have the CPI report that's really going to flip the script potentially. I checked Florida, ain't got nothing on Cali. I live in Cali. Florida, you mean like lifestyle wise or what? Oh, you mean expensive market? LOL, Florida most expensive real estate market. I don't know who said that, but no, Florida's definitely not the most expensive. Florida is the most expensive real estate market. No, California blows it out of the water, man. Yeah, and look, I lived in Florida for 16 years. There are things I love about Florida, but I'll leave it there. Let's see here. Higher for longer. Miami super expensive. Miami is having a little bit of a spec boom. And so what you're finding is you're getting a lot of gentrification right outside of Miami, and that's increasing the average prices substantially in Miami. Yeah. But personally, if you're just like Miami is booming, if you're off South Beach or Brickell, go drive around outside of Brickell, like outside of downtown Miami, and tell me if you want to live there. That's all I'm saying. Okay, there's a lot of gentrifying that's still planned. So I don't want to live there. It's also too hot. I'm tired of that. You know, I had classmates in high school. Well, actually one. I mean, there were other people that I didn't know that had this, but one person that I actually used to debate with. It's kind of sad. Well, it's actually very sad because it's so young. But high school classmate died of heat stroke, just on like a normal, like, I think everybody was going on a hike or something like that. Terrible. But yeah, it's the humidity combined with the temperature makes it a little hotter. You don't get that dry heat like you do in like Phoenix or whatever. My last stop there was Hialeah. Too many hurricanes there. You know, I didn't mind the hurricanes actually. I actually like, and I don't know, but I am more afraid of like a big earthquake than I am a hurricane. Maybe that's mixed up, but the reason for that is the hurricanes, you get a heads up. You know, with the hurricanes, you know what's coming. Oh, so Jim Cramer's covering this Pika or the Gemini, the Google Gemini thing. Yeah, actually, we covered Gemini a little bit in the Meet Kevin podcast yesterday. It's very interesting. I thought that was very, very cool. I can't wait for that to come out in reality. I think Pika is a little bit more like when they call it Pika, I think they're Pika-ing like the 5% that's really good, and they're cutting out the part that's not that good. Yeah, hurricanes give you a warning. Earthquakes don't. Exactly. I think the strongest earthquake I've actually felt out here was like a 5. You know, which isn't that big of a deal. But I will say, living in California, I personally like to live in newer homes. And for example, we got one that's like a 1940s that we're going to go into, and you know, hiring outside foundation repair work is extremely expensive. But with a raised foundation property, what's so cool is you can go in there and you could just Simpson strap everything, and you could really update the earthquake standards on some of these homes. Some of these homes, it's so crazy. You'll go under the foundation, and it's literally held up by rocks. So you'll have like, you know, the floor beam going across, and then you'll see like these large pebbles stacked on top of each other. And then the house sits on those like round rocks. And it's like, wow, there's no strapping at all. Because remember the things you have to deal with an earthquake. An earthquake is like, for structural purposes, it's not just weight down. That's called load, right? That's easy. The pebbles deal with the load really easily. But what they don't deal with really easily is sway. And then I forgot what it is. It's torsion, I think, is the other one. When the house bends, that's a disaster. So see, that I think is so fascinating. You know, with hurricanes, obviously you got to deal with wind speeds and water and drainage and, you know, shingles flying off people's roofs. And people don't have comp shingle really as much in Florida on newer homes because it blows away in the hurricanes. You do in Hialeah. But you know, those shingles go flying and whack people, although you shouldn't be outside in a hurricane anyway. And you don't want to be in a mobile home park during a hurricane, because the hurricanes, it's evil. They're like a boss that spawns tornadoes, and then the tornadoes wreck the mobile home parks. But it's so weird how they wreck them. Like, it's like a weird zigzag they'll go through. So you'll see like 20 perfectly good mobile homes, and then you'll just see a row of like mobile homes chopped in half. Like I vividly remember as a kid walking through a mobile home park and looking, and you would just see somebody's family room with like their TV and their couch, and the whole half of the house is gone. Tornado. Scary, man. That like it was like some of the, like, if you're in a mobile home, just leave in the hurricanes. Most people do. Well, depending on the category. Okay, anyway, let's get back to the market. I don't know why we're reminiscing over this. Well, we got to be, we can't be too stale here. Is somebody talking about Weston? Did somebody just say something about Weston? Metal roof in Texas. Metal's nice. Earthquakes make tsunamis. Dude, I'm tired of this Andrew Tate garbage. A podcast with George and what he says about the downfall of the West. No. But I also don't heavily care. Give me a TLDR here and I'll give you my opinion. Somebody here in the chat said Weston. Weston is an amazing place to live. Like if I had to pick a place to live in Florida, it would either be, I don't know if I would actually pick Clearwater. The beach is beautiful in Clearwater, but honestly, I'd rather live in Weston. It's 30 minutes to the beach, and then you have your beautiful warm water. You know, I used to live in Weston. We would trailer our wave runner before we lost it all to the beach. So that was really cool. But Weston is a place to have like a family and kids, and the schools are great. I went to Gator Run Elementary over there. That Weston is the place to live, man. That is, if you want to live in Florida, Weston Hills, man. That's the place. Broward County. Well, permitting in Weston. Well, what do you need to permit in Weston, bro? All the stuff is like 20 years old. It's all like 80s, 90s, and 2000s. What do you need to permit? You know, it's not like you're building an add-on in Weston. It's a master plan community. It's a master plan community. Brickell is the best. Brickell is the best if you're like 20 and you want to go work in crypto. You want to raise a family. Brickell doesn't hold a candle to Weston. Not a candle. What are my thoughts on Rivian? Rivian's getting better. You know, let's look at it really quick. We'll do it live. Investor Relations Rivian. Look, I think people forget that I spent all, first of all, not only did I grow up in Florida, but I spent all year before we started buying for HouseHack going to, I feel like 200 different cities almost. Maybe not that many. I feel like, I mean, we took like 300 flights, but I've been across this country a lot this year. And that's experience you don't forget. So, and we're actually going there studying. So, okay, let's go get Q3 10Q. I love my SEC forms. Let's go HTML. There we go. Okay, baby. So, the biggest concern, obviously, is dilution with Rivian, right? So you have 3.6. You have about 4.4 in negative free cash flow, okay? Negative 4.4 in 9 months. Western Kansas is where it's at. Yeah, if you're a farmer. Dude, I still got to come visit you. Like, Farmer Brett, I want to visit you. I want to see your Caterpillar tractors. I want to ride them, baby. And we need to confront Farmer Brett. Farmer Brett's a good guy. He's got the contrarian opinions that I respect. Because they're good. They're really good. Along with Steve. I like Steve too. I got to find him. He's probably at some uranium facility somewhere because that's doing really well right now. So thank you for forcing me to buy some uranium, Steve. Anyway, so it's true. He made me buy some uranium, like $1,000 of uranium. 4.7. Okay, so 4.7 of negative free cash flow. So what are we going to do? 4.7 divided by 9. We have a negative. We're burning $500 million. Oh, yeah. Jacksonville Beach is the only place that's slightly okay. I got so mad in Jacksonville. I don't really want to talk about it, but actually, is that whole? Yeah. I'll leave it there. Anyway, so a $500 million of negative free cash. Wait. Did I use 2022? I did. Okay, I used negative 2022. Or 2022. So 3.7. Okay, well, we're about the same here. CapEx 728. That's it's about the same, 4.5. 4.5 divided by 9. So yeah, $500 million we're burning. So we're still burning on trend $500 million at Rivian. $500 million of burn. And then we have current assets of 11.5. We have bills to pay of 2 billion. We have a lot of cash. Damn, Rivian. Oh, that's 22. I keep messing that up because they're doing the stupid right to left reading. I hate that. Damn it, Rivian. Fix your crap. Stupid. Who reads like this? Like 1 in 10 companies do it like that. Ugh. All right. So 7.9 in cash, short-term investments 1. So we get about 9 in cash. That's pretty good, man. That's 18 months of cash. I mean, that's nice. They got 18 months of cash here. And how are they financing right now? I think they're diluting shareholders. I'm pretty sure they are. Which is, I mean, you expect that if you're in Rivian. Proceeds from the issuance of convertibles. Yeah, they're diluting shareholders. So they just borrowed 1.5 billion. They borrowed 3 months. They borrowed a quarter of money, basically, like a quarter of a year of their spending from shareholders. So that's why the thing's in the mud. So I actually think the financials are getting better at Rivian, but you're still burning money like crazy. I can't, and it's uninvestable for me at this point. And I'm not saying it's not going to do well. I mean, it's come off the bottom over here, but the risk is still very, very high. Let's look at their actual operating profit. So gross profit still negative. I mean, look at our loss from operations, 1.4 billion here. We're not close to profitability. In fact, let me see what Bloom and the Wall Street say, and the Refinitives. Let's see what they say. So the databases you could look at, by the way, are like Bloomberg, Refinitiv, Cap IQ. Yeah, I mean, you're not looking at profitability at Rivian ever. It's not in the forecast. Maybe 28, 29, but right now it's not in the forecast. So, I mean, they'll probably rebound nicely when rates come down, but I don't know, man. I'll just say I'm glad I shorted them when I did. Pembroke Pines. Pembroke Pines isn't bad. What's that school? Oh, you know, I almost went, like, my dream was to go to Pinecrest. But we didn't have enough money to go there. So they didn't want us. We were too poor. Where's that school? Pinecrest School, Florida. Yeah, this was it. Fort Lauderdale. I wonder how much it is. But yeah, here. This was the school. Oh, that looks cool. Look at that. They got teleprompters. How cool. Future. Yeah, that was it. Oh my gosh, this brings back memories. I did like a shadowing day there. It's so cool to shadow other schools and stuff like that. But then I just felt like a loser because I'm like, man, my school ain't anywhere near as cool as this. This is like a college. What is this? Tuition. Holy crap. Look at it. Look at the fees. $30,000 for pre-K or kindergarten. Holy crap, dude. Oh my God. It's so expensive. Grades 9 through 12. $42,000. Holy, I didn't know it was that bad. Oh my God. Look at that. One-time matriculation fee, $1,500. Oh, but wait, this includes your lunch and your high school textbooks. Student accident insurance. Bro, how many people actually need that? Parents Association membership fees, field trip yearbook. Oh, you get a free yearbook when you pay 40 grand a year. Dude, I think we applied, I'm pretty sure, for financial aid. And even after the financial aid, it was still like 20 grand a year. And I mean, we were living in like a $70,000 apartment, driving like a 1990 water damaged Ford Escort. And my mom's like, yeah, Kevin, you ain't going to Pinecrest. And I'm like, but mommy, it was so cool. They have all this cool stuff. She's like, yeah, sorry. Yeah, wow. I did not realize it was that expensive. I thought it was going to be like 10 grand a year. Because that's like probably your typical for a private school, 10 to probably 15K. That's insane, man. $40,000. Wow. You know what it is? This is like where the rich people, the billionaires, are sending their kids. Probably. Where is this sucker? It doesn't really matter where it is. Is it in Boca? Oh, well, that kind of makes sense too. Whatever. Okay, whatever. So let's go look at the sticks. Okay. So let's see here. Boom. So look at that volatility there on the Qs. Tesla down 1%, Enphase 0.5%, Rivian down about 1%. None of this is a big deal. This is all your typical kind of daily volatility so far. I think really looking for what happens with CPI is really what we're going to care about. Lulu down 3, GameStop down 3. I find this very interesting. My son's private school is $12,000 in Washington State. See, that sounds reasonable. That's normal. Like, I think about it as $1,000 a month. That's reasonable. And maybe I gotta start paying attention to this more. Okay, I got 4 children now, and who knows? We might be due for well, I guess I do. We might be due for more soon. We'll see. We'll have to have a discussion about that. And I don't know about that. Yeah. Anyway, okay. So what else? Let's see what the suits are saying here. Okay, so I want to make a. All right, well, hold on. So what is this? What is? I don't even know how to say that. Quiescent, quiescent. Who uses that word? What is that? Oh, I gotta look this up. We gotta look this. I can't even read what the suits are saying right now. They're being too fancy for me. What is this? Quiescent. How have I not heard about this? I didn't go to Pinecrest. Oh,
Quiescent.
Quiescent. Okay, being at rest, inactive, or motionless. Oh, whatever. Quiescent unemployment rate. I could just see it. Oh, yes, the unemployment situation is quite quiescent. Oh, my God. Okay, Mr. Caviar. Simon out of London. Oh, of course it would be out of London. A dude in London using quiescent. I'm going to take your quiescent to a pub. The drop in the unemployment rate will help keep the imminent recession narrative at bay for now and allow yields to reprice higher to reflect a less downbeat outlook. Well, okay, you said the most generic thing ever. We knew that. Plenty of room for pullback and rate cut bets. Yep. Hotter than expected wage growth brings inflation risk back. Yeah, I mean, that's one to pay attention to. I somewhat agree with that. Although we're certainly not seeing that at company earnings. So maybe, that sometimes you get this I still think there's a chance the pay raises you got from workers is skewing some of that month over month, or from strikes is skewing some of that month over month data. But I don't know. Like, does anybody know when you go back from a strike, do you start making more money like right away, or like how do they even survey that? I wonder if they call like, yo, are you making more money or less? And you're like, well, I just made more money on a raise from the strike I came back from. That would obviously have, that'd be something that'd be hard to price in. The fact that, so I emailed the suits. And they replied and they said, we're going to find out. They have not found out yet. So they don't even know. So if they don't even know, how are the suits supposed to price in the effect of strikes on monthly wage changes? Nobody knows. If nobody knows, then what the hell? Then that may be why the estimates are weird. Why do people always react that way to a word they don't know? It appears more often than Kevin makes it seem. How do people react? Croissant. Okay, if you want to have a good time, actually, I don't know if it's that way anymore today, but you got to like leave your phone in America and just go live in Paris for 2 weeks. That was probably one of the best times of my life. Outside of obviously like children and family and stuff like that. Like, Paris. Absolutely beautiful. And just sit there and get yourself a little stupid espresso with a croissant and spend 30 minutes doing nothing other than sipping on an espresso. I can't do that in America, man. I'm PvPing, man. I'm skull. Like, let's go. Such a different culture. Somebody here says they go to Munich each month for a summer. That's a nice place. München. Was machen Sie in München? UAW is having a strike in front of Mount Sinai. All right, let's get the bell. Yeah, more strikes for the UAW. That's interesting. Mount Sinai. All right, let's listen to the bell.
They own the hotel market. I think that this is a deal that helps them both. Now, I know Honeywell, frankly, it's a little beyond me to think why it's down 3, because this is going to be accretive. It makes a lot of sense.
Oh, we got a labor attorney here giving us some insight. Okay. All right, hold on a sec.
You never have enough security. You never have enough safety. The carrier, obviously, they had to get the proceeds. And I think there was some people who think that they couldn't get.
I know how to piss him off. I'll say something to the labor attorney that'll piss him off, and he knows what's coming, I think.
Capital Trust owns Honeywell. The stock had been creeping up as if there was going to be an announcement. You got the announcement, and it's something that was selling very knee-jerk way.
We'll talk about it with them in a couple of minutes. Let's get the opening bell and the CNBC Real-Time Exchange and the big board. American Equity Investment Life celebrating its 20th.
There it is. It's about 40% green. Okay. You want to know how to piss off a labor attorney? And I'm not doing this to truly try to piss you off. It's just because I'm just going to say it. And you could say what you want after that. I'm curious. But I have a feeling what you're going to say. The one thing you could say to a labor attorney to upset them, it depends what side they're on. If you're working on the corporate side or for the individual. But because I think you're saying labor attorney, you're probably working for the individuals. Always sign, and this is not legal advice. It's just to bother them. Always sign employment arbitration agreements. Let me know. But anyway, okay. So the answer here, Kevin, I'm a labor attorney. Usually the deal provides retroactive pay increases or a ratification bonus, new wages with retro and bonus on the next pay period. See that right there, that alone could justify the this move in this jobs report. Because remember, we had a 30% increase. I'm gonna write that down. That's very interesting. We had a 30% increase or 30,000 move in manufacturing solely because of the wages. I just got a smiley face from TR. All right. So okay, where is it? Maybe that's too generic. My move it wasn't good enough. All right, but let's write this down here. So manufacturing. Okay, here we go. Can a labor attorney per commenting labor attorney. That's what we're gonna call them. And we're gonna say usually retro pay increase and bonus on next pay period. I'm a management side attorney. He's on the other side. That's awesome. Okay, yeah, all right. Yeah, exactly. That makes sense. The ones who represent workers say, no, don't sign the ARB agreement. The ones who represent the corporations always sign the ARB agreement. That's awesome. Okay, so that's really interesting insight, though. You know what? I'm going to tell the suits. Just heard from one labor attorney that pay usually retroactive next. That's interesting. Okay, very good. So let's see here. Somebody, Everett Miner, says, I need Enphase and Tesla to rip. Well, everybody does. Look, everybody wants their stocks to go up. Like, let's be clear about that. And that's why people get defensive about their stocks, right? Because it's like everybody has these goals and dreams, and like all of your goals and dreams get easier when your stocks go up faster. Of course. Bro, Far Real is here every single day asking me about that Head and Shoulders. I see what you all are saying. I can't respond to everything, but I think it's fine. I'm pretty sure for the last week, every single day, I have seen you say that. Well, thanks for being here every day, honestly. Okay, So what do we got? The Qs are down about 30 bips here. But the actors also went back to work. Yeah. True. Yeah, that's interesting. The actors also went back to work. And we didn't. Then that is interesting. That's an interesting offset. Yeah, unless we're talking like a comparison to the last jobs report, because the last jobs report, if we go jump into job by month, if I go to the last jobs report, let's go to November jobs, employment situation. Come on, where is it? Latest releases. Here we go. Oh, they just give you that. I want the last one. Whatever. Yeah. So what they're saying is like you didn't see an increase in this. Well, let me look at the month over month spike changes. That is interesting because last month, that's true. You had those folks that went back to work, and the average hourly earnings in the prior release was 0.2. Now that is interesting. But prior was movie industry and 0.2%. That's a really good point. That's a tough one to parse out. But see how like that gets blurry and kind of difficult? Yeah, that is very interesting. Let me see what they're saying over here.
You really are, right? I bet it. Well, Amazon is, I think, ready to have a bigger office there than anywhere else in the country. Where? Nashville.
Oh, yeah. You know, they're building Twin Towers. It's amazing. Yeah.
And I said, are you going to have that big room where you can have a Taylor Swift concert? And it was kind of like, Andy's so smart. I mean, I think he was thinking, oh, God, Kramer wants to have like a pull quote. Next, he's going to talk about Travis Kelce.
Right.
But.
All right. I don't know. Like, come on, Jimbo, man. Like, talk about the stocks. Anyway, I mean, I was talking about Pinecrest, in fairness. All right, well, Tesla's almost positive. Let's go. You got Enphase, slightly positive still. Let's go. Then we've got Peloton. Does anybody have any plans of buying a Peloton anytime soon? Anyone? Okay, let's send out that course member live notification. There we go. That's done. Okay. Gain the lead. Oh, yeah. We got to play it. As soon as Tesla goes positive, we'll play. Oh, come on. Here we go. Come on. Push it. It's almost there. No, it's going back down. Come on. So close. BTC right under 44K at 43.7 here. Let's look at some of the others on the crypto side. We've got BTC Ethereum. I mean, great week, 13%. Solana up 21%. Cardano, holy crap, rappas, bro, 40%. 40% in the last week. Wow, good job, Cardano. It's back to 53 cents. Wow, that one has gained the lead. That's the best performing top 20 crypto asset in the last week, Cardano. Very interesting. Jeremy, how is that Peloton treadmill? Keep your children far away from it. But I was curious how it is. It looks pretty cool. So close. Come on. It keeps getting to like 6 basis points to negative here on Tesla. Gold is going to give Peter Schiff a heartburn this weekend. Oh, Peter. I want to go visit Peter again. Yeah. Oh, gold down another percent in 2021. Current price of gold. Well, Indy Navy there. Oh!
Gained the lead.
Yeah. Oh.
Lost the lead.
Oh, man. That reminds me of like King of the Hill in Halo, where it's like you kind of you got a tight match and you kind of get ahead for like a brief moment. You're like, oh yeah, we're winning, and then oh no, I'm actually losing. But I think we're doing okay. No, see, it's too close to call. We'll come back. All right, boy, I did not think that said Polestar there for a moment. Boy, that's only yeah, okay. That I don't know why I read that as a different word there. That is inappropriate for a live stream, Kevin. Okay, so let's see here. Roblox 3.5 C3 AI. That's a scam. Oh, I need to put that on the soundboard. That'd be cool.
Go yourself. Is that clear?
Etsy. Oh, how's Etsy been? Let's see. Okay, look at that Etsy rounding the bottom there. That's nice. It's a nice rounding of the bottom there on Etsy. Let's go Diz. Yeah, Diz kind of coming off that bottom as well. Let's go. Ooh, Google down 1.4%. Oh, way down the indices. I wonder what's going on with the Googs. Probably just all-time highs. How's Caterpillar? I like Caterpillar and John Deere. I think they're good companies. So, yeah, look at that. There's Caterpillar. All right. So, let's see here. Let's get some more updates. All right. So, things pretty mixed. You're still up 9.1% or basis points on the 10-year. What about 5-year break-evens? Those probably picked up again. Line chart. Google faked their Gemini presentation. Yeah. You know, honestly, the 5-year break-even did not pop as much as I thought it would after that jobs report. That's not bad. The 5-year break-even is the one that we just popped over the year's low, but that's not bad. If the market was really concerned about inflation, it would be much worse than that. We're at 211. The year's low on the 5-year break-even is 210. And yesterday we got down there to 2.8. So you could see that on screen now. There you go. Look at that. Tiny little, that's not bad. That white dotted line right here, this one, is basically your bottom. I mean, who cares? That's so nominal. So the market isn't actually seeing this jobs report as highly inflationary. So that's good. All right, let's see what else is being said. If you haven't been reminded yet, I'm live every day. The market is open. So set your calendar, 5:25 a.m. Set your alarm. Okay, let's see here. U.S. labor market defies slowdown. Well, that's the big thing I think that a lot of people are going to talk about now is this idea that what recession? Yeah, it's a good print. Resolution of the auto workers drove payroll gains. Fed widely expected to keep borrowing costs stable. Let me see what the Fed monitor is. So we're looking at a 5% chance of a hike in December. That's interesting. That did pop. That popped about 5%. So you definitely had a move there. And then you have a 5% chance of a cut or a 5% chance of a hike in January versus a 10% chance of a cut. And then the odds for our first rate cut are now just 44% in March versus 54%. Well, it's actually more like 46 versus 60, but whatever. Okay. Very good. All right, let me see what else I can find here while I play this. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. This is a very interesting argument. Auto workers are higher paid than other workers, so going back means wages rise regardless of when the pay starts. That's very interesting. By default, they increase average wages. That's very interesting. I'm gonna write that down. By default, average wages up. Wow. Yeah, that is so cool. Now, somebody here says, it's funny, we're all heading back to the 80s, but I don't think today's generation can handle it and will be more like the 30s. Huh. I think your like button is stuck. Yeah, test it. NVIDIA pushing it. I'm at 5% cash at the moment. Can you go over what Kevin from Home Alone bought for $19 that today now costs $70? Ooh. What? Okay, I'm going to ask ChatGPT. What did Kevin from Home Alone buy for about $19 that now probably costs $70? Let's see, because I don't know that trivia, but this is something that GPT should be good at. Among the items he bought a bottle of laundry detergent, no. Milk, no. A bag of groceries, and most notably a large pizza, which is the recurring element in the film. It is important to know a specific item that would cost $70 now due to inflation isn't explicit. Well, of course, it's not much. However, if we consider inflation trends, it's plausible that the total cost of an assortment of groceries, including the large pizza, could be around $70. Interesting. All right. A toothbrush. That's funny. All right, folks. I'm going to jump to the course member live. Since listening, I have doubled my income. Thank you, Kevin. That's amazing, man. Good for you. Morningstar. Well, I guess I don't know if you're a man. But anyway, there's a 90% chance you are. Eric, thanks for becoming a member. Yeah, Kevin still has not checked. What? What are you complaining about? Kevin has still not checked the inflation-adjusted Tesla stock price. I thought we did this. Let's see. So inflation-adjusted Tesla, 414. Just add 18%. 488. 488 is your inflation-adjusted. All right, heading to the course member live stream. Let's go do some analysis. See y'all later. Love y'all. Thanks for being here. Bye.